What is Solana Sol and how does it work? Solana, a cryptocurrency that debuted in April 2020 with little fanfare, has recently gone on a rampage. Due to its remarkable speed and low transaction costs, Solana is one of the most popular blockchains in 2021. Sol is Solana's native cryptocurrency, and its value has risen from around $1.50 in January 2021 to nearly $208 in September 2021, making it the world's sixth largest cryptocurrency. Solana transactions can cost as little as $0.001 US. So what exactly is Solana? Is the extraordinary price increase of Solana justified? Let's take a deep dive into Solana. What is Solana? Scalability is one of the most challenging aspects of blockchain technology to overcome. As these networks expand, they frequently encounter transaction speed and confirmation time constraints. Solana seeks to address these issues while maintaining security and decentralization. Solana was created by Anatoly Yakovenko in 2017. Yakovenko is a software engineer with considerable knowledge in compression techniques who formerly worked for Qualcomm and Dropbox. He initially detailed proof of history and how it may be used to speed up both proof of work and proof of stake-based blockchains in the Solana white paper. They envisioned a novel approach to dealing with the throughput difficulties that were present in both the Bitcoin and Ethereum blockchains, with the help of Solana CTO Greg Fitzgerald and Eric Williams. Solana was developed from their concept of a trustless and distributed protocol that allows for higher scalability. Solana is a web-scale blockchain that allows decentralized apps and markets that are fast, secure, and scalable. The Solana blockchain uses a new way of transaction verification. Scalability and speed concerns plague Bitcoin, Ethereum, and plenty of other projects. The Solana blockchain can process thousands of transactions per second using a mechanism called proof of history. Solana's native cryptocurrency is Sol. It is used to stake coins and pay transaction fees. How does it work? Solana is a third-generation proof-of-stake blockchain. It has created a one-of-a-kind method for identifying the timing of the transaction known as proof of history. For cryptocurrencies, keeping track of transaction sequence is critical. Bitcoin does this by grouping transactions into blocks that are linked by a single timestamp. These blocks must be validated by each node in agreement with the other nodes. This procedure adds a considerable amount of time for nodes across the network to validate a block. Solana, on the other hand, adopts a unique approach. Let's take a closer look. The SHA-256 hash algorithm is used to hash all Solana events and transactions. This function takes an input and generates a one-of-a-kind result that is nearly impossible to predict. Solana takes a transaction's output and feeds it into the following hash's input. The hashed output now indicates the order of the transactions. This hashing method results in a lengthy, uninterrupted chain of hash transactions. Without the use of a traditional timestamp, this feature creates a clear, verifiable sequence of transactions that a validator adds to a block. Validators can simply check how much time has elapsed because hashing takes a specific amount of time to complete. Proof of history is not the same as the proof of work consensus method used by Bitcoin. Bitcoin blocks are huge collections of transactions that are not in any particular sequence. Based on their local clock, each BTC miner adds the time and date to the block they mine. The timing may differ from other nodes or possibly be incorrect. The nodes must then determine if the timestamp is valid. Validators process and send less information in each block by arranging transactions in a chain of hashes. The time it takes to confirm a new block is substantially reduced when a hashed representation of the most recent state of transactions is used. It's critical to recognize that proof of history isn't a consensus process. Instead, it's a technique to cut down on the time spent checking transaction orders. Selecting the next validator for a block becomes considerably easier when proof of stake is used. Because nodes need less time to check transaction orders, the network may pick a new validator more quickly. 50,000 TPS transactions per second and 400 MS block times are now supported by the system. The main goal of Solana Finalized is to demonstrate a possible collection of software algorithms helpful for blockchain development. As a result, transaction throughput will increase in perfect sync with network capacity. Moreover, all of the blockchain's features such as scalability, security and decentralization must be met. Furthermore, the system can support a maximum of 710,000 TPS on a normal gigabyte network and 28.4 million TPS on a 40 gigabyte network. Traffic and costs are kept to a minimum in Solana since it is so quick. According to the creators, Solana's high speed and low prices will ultimately allow it to compete with centralized payment processors like Visa. To make the blockchain match the capabilities of centralized systems, the Solana team has created 8 essential technical features. The most prominent feature is undoubtedly proof of history. However, these characteristics combine to produce a high-performance network with 400 ms block times and hundreds of transactions per second. To put this into context, Bitcoin block time is approximately 10 minutes and Ethereum's is around 15 seconds. Sol token holders can use the blockchain's proof-of-stake consensus process to stake their tokens. You can stake your tokens with validators who process the network's transactions using a suitable crypto wallet. Those who have staked share some of the rewards with a successful validator. This incentive system encourages validators and delegators to operate in the best interest of the network. Solana has about 900 validators as of May 2021, making it a very decentralized network. How to use Solana. Sol is the native cryptocurrency for Solana and it functions as a utility token. When making transfers or dealing with smart contracts, users will need Sol to pay transaction fees. As part of its deflammatory strategy, the network burns Sol. Holders of Sols can also serve as network validators. Solana, like Ethereum, lets developers establish smart contracts and blockchain-based projects. The SPL protocol is used by Sol. SPL is the Solana blockchain's token standard comparable to Ethereum's ERC20. The Sol token has 2 primary applications: paying for transaction fees incurred when using the network or smart contracts, staking tokens as part of the proof-of-stake consensus mechanism. New Sol use cases are being created by dApps building on Solana. ChainVote, for example, is developing a decentralized finance DeFi voting software for corporate governance that will allow users to vote using Sol tokens. In the first 2 quarters of 2021, the price of Solana increased by over 30 times, making it a favorable choice amongst investors and speculators. Sol tokens can be kept in a Solid.io crypto wallet created by Serum Academy, the trust wallet for mobile devices and other SPL-compliant wallets. You'll need a wallet that supports staking if you want to stake your Sol. You may use the Solana command line tools or a Solflare wallet. You'll be able to create a stake account in your wallet and delegate your Sol tokens to your validator. Is Solana a good investment? Solana, while being a new project, has delivered on its promise of speed and scalability. Its token price has also fared well, attracting investors' attention. Nonetheless, the network's acceptance and usage are still in its early stages. We won't know whether Solana's speed makes a significant impact in the cryptocurrency industry until we witness tremendous traffic and additional use cases. Having a fast network is beneficial, but the advantages will only accrue when more people utilize it and new use cases emerge. Solana might be a good investment in 2021 if it can genuinely compete with Ethereum. Decentralized exchanges, DEXs, non-fungible tokens, NFTs, and automated lending protocols are among the infrastructure on Ethereum's blockchain. Given the importance of network effects on the crypto business, if Solana is unable to build up its infrastructure before Ethereum migrates to proof of stake, it's unlikely that Solana will be able to compete with Ethereum's network. Cryptocurrency values are always fluctuating, and you never know which way they'll go. As a result, you must tread cautiously to ensure that you do not invest money in Solana that you cannot afford to lose. Always pay attention to what experts have to say and keep up with the news. Don't put too much money in at once. Risk reduction is essential. Is Solana legal? Solana is legal tender in the United States, but whether Solana is legal in other countries is ultimately a matter of national sovereignty. How do I protect myself? Protect yourself from scammers that view cryptocurrency as a way to scam investors. Buyers beware as always. Beyond those issues, simply owning Solana puts you in danger of theft as hackers attempt to break into computer networks that keep your money safe. In 2014, a well-known exchange went bankrupt after hackers stole hundreds of millions of dollars of bitcoins. Those aren't usual hazards associated with stock and mutual fund investments on major US markets. How to buy Solana Sol. To buy Solana, you must first establish an account with a crypto exchange that supports the Solana Sol token. If you're buying Sol as a long-term investment, you'll want to keep it safe by putting the private key in a wallet. Then it's time to exchange some USD into Sol. Simply go to your exchange's Solana Sol page and make your acquisition. Unfortunately, the most popular crypto trading platforms have yet to add Solana. With such a promising prospect, it's not unlikely that Solana will be added to more crypto exchanges in the near future. Binance, Kraken, Coinbase are the well-known cryptocurrency exchange where you can open a wallet and buy and sell Solana Sol and other cryptocurrencies. Solana Sol is also available via an increasing number of online brokers, including eToro, Crypto.com, etc. Why should I buy Solana Sol? I must first issue a disclaimer here before answering this question. This is not financial advice because I am not a financial consultant. This is my own opinion, not financial advice. Before investing in any of the various cryptocurrencies available, please conduct your research and due diligence. This is created to help you easily understand the topic with our animated explanations. The big question is whether the Solana craze will remain. All of this development has clearly been included in the token's price and then some. Sol's market capitalization is currently surpassing $50 billion. The Solana blockchain presently has 339 dApps, although the majority of them are still under development. When compared to the approximately 2,845 dApps on the Ethereum network that are already in the commercialization phase, this is a drop in the bucket. It doesn't take much expertise to invest in cryptocurrencies, but it does require a lot of foresight to recognize when it's time to sell out. Solana is currently on the verge of reaching euphoria. As a result, it's better to hold off on purchasing assets until their value rises. For early investors, this is an excellent moment to cash out. Only invest in Solana if you feel it will outperform the market in the coming years or decades. Investing isn't a get-rich-quick scheme, so stay away from popular assets that promise big returns in the short term. Nobody knows if Solana will succeed, but if you have trust in its long-term potential, be prepared to ride through the waves of volatility with your investments. Bitcoin's value has dropped by more than 80% in the past, and Ethereum's value has dropped by almost 95% on occasion. Solana or cryptocurrency in general may not be the best investment for you if you're not okay with short-term volatility. Will Solana become a widespread and mainstream form of currency in the future? Nobody can be certain. It has its benefits, but it remains very speculative at this time. It might be a good long-term investment if you believe in its potential. Otherwise, there are a plethora of alternative investment opportunities available.